In today's business world, being an average CEO is no longer an option. That's why we're committed to equipping you with the resources and the tactics necessary to not just survive, but to thrive. You're listening to Not Your Average CEO Lifeline podcast, where we are more than just a voice in the crowd. You are listening to another episode of Not Your Average CEO Lifeline. This episode, we are shaking things up a bit. We have special guest with us, Jason Kruger. He is going to bring some insight that you have never heard before, all things shaking up your business. So get ready to take some notes. Thank you, Jason, for joining us today. Can you tell our audience a little bit about yourself, your background, all things, Jason?
Sure. Thanks, Nicole. I appreciate you having me on the show. I'm sure I'll start with my professional background. I started my career, I guess, back in the late 90s in public accounting. So I'm more of an accounting and finance background to start. Spent close to 9 or 10 years in public accounting. Most of that time was with Deloitte & Touche, which is one of the larger Big Four public accounting and finance firms. So got a lot of experience with all different types of companies, different types of industries, public companies, private companies, small, big, really across the board there. I was in the financial statement audit side of Deloitte. And while I was there, I continued to just learn and grow my career. And I also worked with a number of companies where I saw a true need, where I felt companies, especially in the small and mid-market, really deserved better than what they were getting from a talent perspective, from the value they were getting, especially around their finance and accounting operations. And a lot of these companies, they didn't need a full-time CFO, but they also couldn't afford the top talent. And so from there, I left Deloitte and decided to start my own company, and that's Signature Analytics. And what we do is we provide outsourced accounting and CFO advisory services for companies in the small and mid-market. And what we're able to do is bring that top talent to companies to leverage their accounting and finance functions so that they can really focus on running their business effectively by leveraging the numbers, getting visibility into the numbers, but also using that accounting and finance function of their business to make decisions so they can grow and achieve the goals that they have, versus using accounting and finance just to pay bills, to invoice clients, make sure you get your taxes done at the end of the year. So shifting that mindset from, hey, I just have to get this done, to a situation where there's a lot of value in that function. And so now we're a 85-person company, all full-time employees. We serve clients across the country. Most of our clients are fully remote. We do service some clients on a on-site basis, but we're very flexible in how we work with our clients.
It's wonderful. I'm a big fan of fractional support for small to mid-sized business owners. I think it is cost effective. It just makes sense in every way, shape, and form. So I think that's wonderful. That's the service that you provide. So can you tell our audience how you think they can start shaking things up with their business?
Yeah, I mean, I think I have an interesting perspective because I've worked on a number of companies and worked for a number of companies, but I also started my own company. And so grew our company from 0 employees to 85 and counting full-time employees. So I have an interesting perspective. And for me and for us and our company, it really starts with the numbers. And it's not just accounting and finance. It's really the metrics of your business as a whole. So most companies are broken down into, I'd say, 4 or 5 different departments or critical areas. So you have the finance function, what we've been talking about. You have operations. You have maybe sales and marketing. And then you have human resources or HR. So really defining what are the goals I have as a business owner or as a CEO. And that really defines then how you look at your business and how you approach your business as you move forward and the decisions you make. So for example, if you're looking to accelerate and have a high growth company and you want to sell your business in 3 to 5 years, you may look at different numbers or information than if you are a business where you're happy and you want to keep and maintain that business indefinitely over a long period of time and maybe transition it to family in the future. And so when I look at shaking up your business, it's how do I understand my goals? What are my goals? What am I trying to accomplish? And then how do I tie the metrics of my business into those goals? So for each area of your business operationally, what are the key metrics that I should be looking at that define success? From a financial perspective, obviously understanding the margins of your business, understanding what defines success there. HR, I never knew how critical HR function was until we had a great HR leader that can really help develop culture, internal and how we evaluate and the performance evaluation side of our business, how we continue to grow the careers of our employees, for retaining our employees, and then marketing and sales. And so when it comes to shaking up your business, knowing your business is critical, and making sure you have the right people to support the growth in each one of those areas.
I really like that you said you didn't realize how important HR was. And, almost 2 decades ago, I didn't realize either until I went into an HR company and developed into their COO, and how important it is in growth. And I think a lot of people have oversight on that. And there's kind of this weird stigmatism that goes with in quotes HR. So
right.
I'm glad we have that in common.
Yeah, I mean, it's funny. I mean, nobody really thinks of that as a critical area, and that's probably one of the last areas they actually hire somebody, because it's like, okay, well, what is it? I got to process payroll, and I have to, what other stuff? I got to make sure I have health insurance and whatnot, but it's so critical. And the individual we have now really developed our entire what we call people management structure. So who's reporting to who? What's the overall process associated with how we evaluate our team? How do we define career growth and development? How do we support our individuals and team? All of that is so critical because we want to maintain we want to maintain our people, because our people are what drives our success. And turnover in people is it's so expensive. It's just so expensive that anytime we have turnover, we know it's expensive. So we invest heavily in that side.
We agree. Ours is a people engagement director. So it's not necessarily called HR, but in a remote world as well, as it's hard to develop a culture remotely. And when everyone was so used to being in the office and being, I use the expression all the time, used to be able to pop my head out of my office and say hi to everyone. And they knew I was having a good day by my facial expressions, but they may not see that on a day-to-day basis anymore, unless I have a Zoom meeting and it's not just a phone call or a chat. So developing a remote culture is important as well. And HR, so to speak, is there to build upon that now.
Right. Yeah, absolutely.
Change just from, HR does payroll and our health insurance.
Right. Exactly.
So if you could tell our listeners to start doing something right now to shake things up, what would it be?
Yeah, I would. What I found to be most successful is I try not to be the smartest person in the room. I think a lot of business owners, they want to run their own business. Hey, I make all the decisions, et cetera, et cetera. But it's critical to know all aspects of your business and then hire or outsource an expert in the areas that you lack knowledge. But that being said, it's still critical to deeply know each area so that you can manage those individuals that you hire. So where I've seen challenges with companies is, they start to have some early success and they say, okay, great. Now I can hire a salesperson, and that salesperson's going to take care of everything, and I can focus on operations over here. And what happens more often than not is that sales individual does not perform at the level they were expecting, and they've invested quite a bit in compensation to get that individual, to hire that individual. And a lot of times it's because there's limited structure. They think, hey, I'll hire the person and they'll do what they need to do to be successful. But that individual still needs direction, oversight, and needs to be managed effectively. And so that's why it's critical to know enough about sales and marketing to develop, to ensure that you can maximize success with that department. Excuse me. The same goes for, other areas of the business, the operational side. Most entrepreneurs and business owners that start their business, that's what they're good at. They're good at the operational side because that's what they know, and that's how they got in that business. But as they grow and scale, maybe they need to bring on somebody that can support them in that area too. So I really can't stress knowing each area of your business deeply and becoming an expert, but continuing to hire people that can drive, but knowing that those pieces of your business is critical. And accounting is the same. There's so much value you can get from knowing your numbers. It gives you visibility into your business and helps you make decisions and understand the impact of the decisions that you make.
I think a lot of people don't realize either when they're starting a business or they're even maybe they've had success and growth, that all of the financials, the operations, the sales, the marketing, the HR, they're all connected, right? So you can't just say, I'm the CEO and I'm just going to let someone do my sales, because you need the operations, the processes to train someone to, right? The HR to make sure that they're managed. And I think a lot of people forget that they're all interconnected. And I do not like, to be the smartest person in the room. I don't like to assume I'm the smartest person in the room either.
Right.
I always want to be able to listen and take in feedback and what other people are saying and process it, regardless if, I am or I'm not the smartest person in the room. So that was wonderful advice.
Yeah. I completely agree with you on that. It's, I tell a lot of the people we work with, I don't, I try not to have as much of an ego. I try not to have an ego. And if I can bring in somebody that's smarter than me and can help us to achieve our goals to be successful, then we want that person. And let's work together to achieve the goals that we have.
I just want to pivot for a moment, Jason, and then you talk about, weatherproofing your business. And what advice would you give for our listeners for how they can weatherproof their business?
Yeah, so when we talk about weatherproofing, we're really talking about, there's a lot of uncertainty in the market right now, or the economy, with interest rates going up and people talking about a recession happening, or maybe we're already in it. We don't know. So when you look at weatherproofing, it's how do we make sure that we're prepared in advance for a potential downturn in our business, our industry, our market. And so there's a number of things we've been working with our clients on. First thing I'll start off with is debt. So a lot of companies have debt, and debt's actually can be a very good thing, and we encourage it if it's used the right way. But companies that are on variable interest rates are getting crushed right now because interest rates continue to go up. So as an example, we bought out another partner in our company about 3 years ago, and we leveraged some debt to do that. We got an SBA loan. We got also a conventional loan on top of that. And both of those loans had variable interest rates, which were great 3 years ago. And then every 3 months, they started to go up. And so because we knew our banker so well, we were able to go to our banker and say, hey, interest rates are going up. What are some other options that we might have? And I think knowing your banker is critical in this situation, because there are options. Even with interest rates high, there's still options to get something a little bit better, either refinance, extend the terms. For business owners, it's really about cash flow. So how do I reduce my monthly cash flow or cash outflow that I'm paying on my debt? And we were actually able to get a fixed rate at lower interest rates than what our variable was at, and extend it out and significantly reduce our monthly cash outflow by, doing the math in my head, by probably about 40%. So significant cash savings. So that's a critical area. The other thing that we looked at too, and that we want our clients to look at, is really validate your team. It gets very sensitive when we talk about employees, and we don't want to let anyone go, but we also want to make sure that our team that everybody on the team is providing maximum value to our company. And if we made investments, or if you've made investments for the last couple of years for growth, and maybe that hasn't panned out, we really want to evaluate very closely the team that we have to make sure that they're providing value now and into the future. And so it doesn't make sense to have this person now in an uncertain economy, and that's a tough decision to make. One thing I forgot to preface this with is knowing your numbers is critical. So if you have visibility, if you have a budget up front and you have actual financial statements that you can trust and rely on, then you can do these analysis obviously much more effectively. The other piece is when you look at expenses, looking at expenses in detail, instead of just cutting everything and saying, hey, you know what, we got to cut everything by 20%. Really looking at each individual line item, and where we've seen a lot of opportunity is in technology costs. Everybody uses different software or software systems. Those costs are going up. I mean, we saw some go up 5, 10, 20% annually. We evaluated what we're using and realized we weren't even using several of them anymore, but we were making payments on them. So those can be eliminated very quickly, and can really provide some significant cost savings there. And then the last couple of pieces are, if you're a manufacturer and you have inventory, I always say that inventory is basically cash on your shelves. So you may show a lot of profitability as a business, but if you have too much inventory, all of your profits are hung up and your cash from those profits are hung up in inventory. So making sure and managing your inventory and looking at, there's also ways from for cost savings on inventory as it relates to contract negotiations on shipping terms. There can be significant savings on shipping terms and really negotiating your contracts the best way. And there's experts that can do that. And then the last thing I'll mention is just margins. I mean, if you have the right numbers and you have confidence in your financial statements and your numbers, you know the margins of your business, 1 or 2% margin increase in your margin can make a significant impact to the bottom line. And sometimes, business owners don't realize that that small amount of difference can make a huge impact. And so that's either from pricing or the cost of your products, and really making sure that you have confidence in what that is, what you're selling, what the cost of the products are, so that you can really forecast effectively as you move forward. So those are some nuggets that we've worked with on our own company and also with our clients.
So that's really helpful. And along those lines, do you have suggestions that our audience could do to increase their profits, even by the end of this year when we're halfway through the year already?
Yeah, I think, well, for me, it really all starts with the financial statements, and making sure you have confidence in what they are. Accrual-based financials is critical to really understand the margins of your business. I just mentioned that, but at the same time, if we take let's talk about a company that has different products that they may sell. So they have 5 different products. If you have financial statements that just show revenue and cost of goods sold, and you look at your margin or your margin percentage, as a company, you may have one number. But if you can break it apart by all 5 of those different product lines, you may see that one product is significantly more profitable than another product. And so then you can make decisions on how you push those products into the market, how you sell them. You can also make decisions on how you might want to better price them out to your, to say, hey, you know what? I need this product to be more profitable, or it doesn't make sense for us to even sell it anymore. Sometimes there is a leading product that creates additional revenue through other products, or it's a loss leader type of thing. But really understanding that product mix and the margins of each individual products is critical. And then really scrubbing and knowing your SG&A, I call it SG&A, sales, general administrative costs, those other expenses that I referenced just before, or costs, are critical as well. So if you combine, again, you say, okay, here's the margins I have of my company, here's the margins I have by product line or service line. How can I improve these margins through pricing 1 or 2%, through costs 1 or 2%, take a couple of percentage points there, and then look down at your other expenses, your lease expenses. Maybe there's an opportunity to even go more of a hybrid, in some cases, your technology stack and your technology expenses, other expenses you may have. And you can really start, those percentage points start adding up, and you can really find a lot of profitability there. That's what we did actually in December of this past year, and it's been tremendous. We went more from a very aggressive growth mode to a little bit more protective based on the future, what the future environment might be. And our revenues have gone up a little bit from last year, but our profitability has gone up significantly. And so that's been a huge benefit for us.
I couldn't agree more. I talk to clients all the time about their, especially the platforms, or what I see, how many platforms they have used and did not cancel, and how quickly that adds up with expenses is tremendous. Especially because a lot of platforms also have grown to incorporate these other functions that the other platforms and softwares were doing. So to narrow it down to maybe one or two and to go fully remote, I think is something companies really, it was eye-opening in 2020 with the pandemic, that we can operate completely remotely and get rid of those leases and cut all the expenses. So I'm really glad that you brought that to light for our listeners.
Yeah. I mean, just for our company as a whole, our software and technology costs, I think we're over $40,000 to $40,000 a month. And we cut that down to, I think, $25,000 to $30,000 a month. So that's $10,000 a month that just goes straight to profitability, right? So that's an extra $100,000 of profit a year just on technology costs. And then there's other costs that can be looked at. Now, I do want to say that when we talk about weatherproofing, there may be some opportunities to increase expenses in areas where you might be able to take advantage of a downturn in the market. So I don't want to say, hey, just cut everything. That's not the answer. Let's make sure that we understand what are the areas that make sense where we can cut, but we're still nimble. We're still able to take advantage of opportunities to grow. And is there opportunity to increase costs in other areas that will allow us to take advantage of other opportunities too?
I agree. Yeah. So our podcast, as you know, is called Not Your Average CEO. Can you tell us what being not an average CEO means to you?
Yeah, I think we talked about it a little bit. If I can, maybe I'll try to summarize some of the things we talked about. But not an average CEO is a CEO, like we talked about, does not want to be the smartest person in the room. They're open to learning. They understand the importance of culture. They have a thirst for knowledge. They want to understand all parts of their business. You can't just say, hey, I'm going to hire this person and they're going to do it for me, right? You got to understand what's happening in your business. If you're talking about a company that wants to grow, you're always thinking about scalability. How do I scale this company? And how do I maximize valuation of my company? I think, a lot of individuals, a lot of CEOs, they want to get to a point where they can sell their company. So even now, even if it's not 3 to 5, 6, 10 years from now, if you can always focus on how do I maximize the overall valuation of my business and be positioned for an exit at any time, because you never know what might come up. You may have an opportunity to exit earlier because there might be a strategic player in your market that's really aggressive. And if you're positioned for success, you have your financials in order, you understand the metrics that drive valuation in your business, you will be much more positioned for a successful exit and to really achieve greater results from a monetarily than you would if you're not prepared. And so those are critical. Is always be looking at the long-term goals and understanding where I can be most, how I can create value and how am I positioned for that value, but always then having those short-term goals that you're focusing on from a day-to-day perspective as well.
Can you remind our audience, because I know you said it in the beginning, but it's been some time now, can you remind them where they can find more about you and your company?
Sure. So again, my name is Jason Kruger. The company is Signature Analytics. It's signatureanalytics.com. You can reach out to us directly through our website. I'm always happy to talk to business owners. If anyone wants to reach out to me directly, my email is the letter J, Kruger, Kruger, @signatureanalytics.com. And again, you can feel free to call me at 858-228-5643. I love to talk to business owners. I like to hear what's out there. If we can help you, that's great. If I can give you advice, that's great. Or if I can introduce you to somebody that might be more helpful, that's great too.
Thank you so much, Jason. It was a pleasure to have you on. I think your advice was on point and definitely worth a second talk to you, hopefully in season 3. So thank you so much for joining us, and we hope to circle back.
Thanks so much, Nicole and Danielle.
You've been listening to Not Your Average CEO Lifeline with your hosts Danielle Cuomo, CEO, and Nicole Glitchio Els, COO. This podcast has been sponsored by Virtual Assist USA. If you'd like to know more about the hosts or exploring virtual assistant services, visit virtualassistusa.com for more information.